No, no, we're not. Jay's the guy next door. I'm the girl next door. We trade.
I'm the
We've been
old man
trading a
next door.
while. We thought we'd tell you what are the good and the bad things that we do, and teach you some different strategies that could get you through
It's
these
funny.
wicked days sometimes, and hopefully either make you some money or save you some money.
Yeah.
So,
So since Sandy just had a birthday, everybody knows that she's young enough to be my daughter.
oh
So
my gosh. Oh, I can't believe you just brought that up. So,
you're still, they really don't count, babe, until you get to have zeros. So you have 4 more years before one really counts.
oh my God. Anyway, it's shocking. It's like it just came, I don't know, I say it every year, but I'm sure all of you other guys feel the same. I love our Discord because we have such a wide variety of people. I've been in Discords where they're all like college kids. And so I feel like when I talk and when you talk, like we really do have an audience of like-minded as well as kind of just, peer support. You know what I mean?
Right.
Peer
Yeah.
support in a lot of the same ways. And one way is not only trading, and then the other is age. Where a lot of us are professionals and love trading, and we're middle aged or
Or have been middle-aged a long time ago.
I was going to say are a little younger. I was going to say fellas, but for the most part, we're all in this together. But
Yeah.
so I was thinking about some of the volatility, and I know that you wanted to talk about credit spreads, and we definitely will. And I think it kind of just segues into when I talk to people about trades. It's usually when they're panicked because the trade is going against them, and they've contacted me. And so, I want to discuss or give you a perspective that uh, trades don't have to be binary. So you get into a trade, whether it be a debit spread or a straight call, as an example, or a straight put, could be a butterfly. And then the trade's going against you, and you have to make a decision, right? So if it goes, past your fiscal rules, right? Your percentage, it could be a dollar amount. You could have got into a butterfly for $30 and you're like, I'm letting this baby go, for the whole period. And so whatever that is, then you just need to follow your rules. There are some people though that are in the group that they have restrictions, they have account restrictions, which means that, they've already done their 2-day trades or whatever it is. And so they feel as if that they're locked into a position. And I feel for you in this sense because this is difficult. And I'm not going to sit here and tell you that uh, what you're trying to do is easy in that respect, because I think trading is hard. Just having your fiscal plan in front of you as well as your trading plan. And then now you're throwing in some other restrictions about how many times you can trade and if today is counting as a closing trade. And so today I had a discussion where someone was just going to hang on to it. And they're just hanging on because it's their last trade of the day. And I just was like, wow, I didn't even think of that scenario. So I would rather you not be in that type of scenario. That's not a winning strategy, is to be in a situation where you're basically locked in, you're held captive because you chose to, right? You chose to be captive to this, because what's the alternative? You get out with a small loss and you can't trade no more for, I don't know, whether it be today and tomorrow and maybe Monday, right? Maybe it's 3 days you can't trade. Um, between you and me, and I know that I'm conservative, I think I would probably just listen to my fiscal rules, get out with a small loss, and then be here tomorrow or be here in 3 days, ready to rock and roll and go enjoy the rest of the week as an example. But I recognize that, we're all very hard headed. We're professionals. We know what we're doing and we want to learn a little something, something. And so I can't tell you what to do, but I certainly would just say to you, I hope that you'll just expand your education or your knowledge and maybe try something different. So if this time you held on to the trade and it sunk you way more than it would have if you would have just cut your loss and walk away for 3 days. Next time, I hope that you'll just try it and say, you know what, I'm going to cut it. I'm not going to gamble. I'm just going to cut it. I'm going to obey my rule and I'm going to go work out for the next 3 days like I should be doing. And then come back with a fresh perspective and start all over again. So
Hmm.
just, because I never even think about being handcuffed because that's exactly what that is. And I don't know how that would feel trading because, when you trade scared or you trade when you're not confident, it puts more of a negative uh, bias into your trading ability.
Mhm.
And so just like a professional, in anything, sports or business, they have, business coaches and stuff. And what are they, the philosophy of winning, right? In anything, a job, a sport, a trading is mindset and confidence. And in your mind, thinking about all the what ifs. Because if you're prepared, then you're not deer in the headlights. Because deer in the headlights means no money. I could just tell you this because it's a battle for me every day not to overthink things and look at charts like 25 different times. So, and my best trading is when I just don't think, I'm just reacting because I've already thought about like what I'm going to do 10 times over again. And so this time I can see it playing out and I just do it. So just something to think about, while you're trading. And then the other thing is trading, is it binary? Sometimes we think like, okay, we get into, that was my original thought and I apologize. You buy a call, you buy a butterfly, you get into something and all of a sudden it's going against you and you're like, okay, what do I do? Okay, so now we went through the scenario that you're going to, follow your fiscal trade plan. And so the next item I'd like to get you to, and we're going to start practicing this in real life with our trading, is that you're going to manage the trade. And sometimes if you feel confident enough in the trade that you have, like we've been putting on cheap butterflies that have been profitable, and we've been just letting those things ride out because it's very hard to, as you're just learning butterflies, I don't want to like, put on more education on top of that for you to now all of a sudden try to manage it. So, but when we think about managing something, I want you to think about your trading is not a binary action. I get into this and I'm either going to hold on to it or I'm going to sell it for a loss or for a win. So sometimes you can make the decision that I'm going to actually add to this trade because it's not working out, but it could work out eventually. And so that's where actually the same type of strategies that we're using right now, credit spreads and debit spreads, as well as calls and puts, could hedge an already existing position. And it doesn't take that much education or knowledge, just really more of a mindset of, okay, this is what I need to do. And do I want to do it? So let me see if I can share my screen here. We'll put up a couple things. And then, of course, if you're starting to have questions, just pop them in the box as we continue this, and I will get to them.
Just a quick segue while you're setting up. It was great on Roku today.
Yes.
I didn't have my alerts on. I was looking at Roku because of some news that came out,
Yeah.
and I put a butterfly on that, and I'm just sitting there with it, and then I saw your thing says get out of this, and I thought, but I just put it on, so so I still have it.
Are you okay?
So,
How is that doing? Anyway, somebody else told me they had it too, and I was just like, okay, no problem. You got it. It's all right. I mean, it was kind of a crazy day, and I'm worried about everybody else's money. It was it actually went up 20%, and I just kind of put it at break even. I was thinking it was going to go more. I mean, I didn't know about the news. It was just on my watch list. And I just saw how strong it was when we first left the gate. And I was like, what in the heck is going on here?
Yeah.
So I just kind of mapped out some support and resistance and thought, well, if it breaks, I think it was during over here. Yeah, and then it went down here and I still held it. And then it started to kind of just do this sideways action. But it did eventually go up if you had some patience. And you could weather, right? You could weather the high IB. We had medium to high IB here. It's over 50%. And so when one of those candles came, you probably felt it.
Yep.
And I noticed that, I probably got into it probably at this candle. It was actually right before, yeah, it was probably right around here. I was getting into it here, and all of a sudden, it went here and then went down and went back up. And I think I just got out of it when it was like right about zero, and thought I didn't want to have to go through this. So you did with a butterfly, and you can handle that. How's it doing now?
I think a couple bucks now. I mean, it's so
Good.
close to the same. Yeah, I'm starting to feel like a carpenter. They say a carpenter, if you
Yeah.
got a hammer,
Yeah.
everything looks like a nail.
Uh-huh.
So every time I start to look at a trade, the first thing I do is look at a butterfly.
Well, good for you. You know why that is so good? And for you newer folks out there, you put a butterfly on and you don't have to stress when you see a red candle.
No, not at all.
Isn't
No,
that sweet?
I love it.
But you could
Yeah.
still have a bullish bias on it. And as you can see right now on a 5-minute chart, let's look at, let's do a little analyzation, because maybe this might be a trade for you tomorrow. So we're at resistance on a 1 hour, but it's, basically went up like wildfire, and it's just kind of basing in this area. And so
Mhm.
as it's collecting its energy, it could go up again, because that's, there's an ebb and a flow to these things. And so what was your profit target? What did you look at, a week ahead, a day?
No, I put it out to September 30th, end of the month.
Okay. So you gave yourself, let's show everyone the trade, because I know that we have some new people here. So on a butterfly, right? So
Right.
tell me your thought process, Jay, so we can walk through it with the rest of the folks real quick.
Well, the thought process was there was a rumor that that it might be on the market.
Oh, for
So
sale.
yeah.
Okay.
So I looked at that. That trade it kind of stayed 70 something in the low 70s. So I just said, well, what do I think might happen? It's going to be somewhere 80 to 85, a good 20%, I guess.
Okay.
And so I went ahead and did 80, 85, and 90.
All right. So, and you just took 85 right out of just thinking about 20%, or did you?
Yeah, that was it. Yeah.
Oh,
So
okay.
I thought, if somebody's going to make an offer, it's going to bump a little bit. I had no idea
Okay, great.
what it was going to.
And if you don't know, Jay has got a business background, so he's just using his the tools he's just got in his previous jobs, careers, and so that's what he came up with, and it's a great thesis. If you don't think that way and you need a little bit more assistance, you could just say, okay, I think in a couple weeks, where would this be? And you just look at the trade tab here and go right over here. And you can see that the market makers are expecting this stock to move either positive or negative about $9.50, almost $10. And where does that put the price at?
Wow, I got close there.
You're a good businessman. I know you are, by the way. You didn't have to prove it that way. But so here we are. And Jay, you just nailed it. You took the hammer and you got it. And so without too much analyzation, you just go right to the butterfly. you open up the trade tab, you go to 85 calls, and we're at the butterfly. You just say buy. Is that right, Jay? I mean, then
Yeah, I did.
you
I
do the
did 80.
strike. So he's
I did.
doing
Yeah,
$50
I did.
or $5. So let me get
So-
this
so-
toolbar out of the way, because
yeah,
you know how I am with this Zoom toolbar. It's gonna,
that we can't see.
yeah, only I can see it. It's driving me nuts. Hi, Cody. There we go. So now,
It's 80, 85, and 90.
thank you. And then you just,
In fact, I almost did a broken wing, but it didn't really help any to do that. So
no, okay. So here we go. He's got one. And remember, on a butterfly, it's buy one, sell two,
uh-huh.
buy another. And it's nice that on any platform you go to, you could find a butterfly. And so it's $47 to buy this butterfly now. How much did you get it for?
Keep talking. Let me go back and look.
No
I'll have to
problem.
check.
So right now, if we were to buy this butterfly, guys, if you wanted to buy it in the morning, it would cost you approximately $47 or thereabouts. And your max profit would be $453. Nice risk to reward there.
I paid 48.
Okay, pretty close. So we're still
Yeah.
with you on that. So let me take these old trades off. All right, so let's look at that butterfly. All right, so here we are with price. Is that right? We're around 72.
Mhm.
And so what we're going to do now is Jay's just expecting this to go up. And eventually, within a couple weeks at the end of the month, get somewhere over here. And as it does, you can see that as time passes, and we'll just, this is your theoretical calendar here. We'll just go to, and did I pick the right date for this, 30th? So up here, by the way, is the calendar for your expiration. So if it expires on the 30th, you're going to put this on the 1st, always the day later. And then this is your theoretical. So now that we're going to just move the calendar up to see theoretically how this would look around, let's do Tuesday the 27th. And you can see that how this, if this keeps going, the pink is on the 9/27 and the expiration is in the blue. And so you can see kind of where that money is and visualize it. And so this actually ends up, you know, gosh, don't these end up being like really good? I've really been, I think this month alone, I think I've done 5 or 6 different ones. And the only one I had that did not make money, that was like a complete loser, was Baba. That was it.
Mhm.
So if nothing else, they're cheap enough to where as they start to make some money and get around this zone right here, you can start selling it off for a little bit of profit, as well as just your break-even point with all of them. And then as it moves into this area, you'll really start making some money. And then if it's closer to the expiration date, you want to take a couple off and then leave that 1 or 2, if you can afford it, to land here right before expiration or on the day of expiration, and then sell it for, as you can see, some pretty decent profit. And of course, let's see here if this expires. So that's kind of where that be. So you can see anywhere in between these wings right here, you're making a lot of money comparably to what you paid for it. And that's why we love butterflies so much here.
Right.
And if you have a small account, this works really well. And you don't have to worry about being handcuffed to all these rules and regulations, because you got a couple weeks for this to play out. And
Right.
one red candle is not going to hurt you. So let's say, Jay, that this goes against you and this just starts like tanking. And it starts tanking the opposite way. And you have 3 of these guys on. And you're like, shoot, I don't want to lose the $120 or whatever it is. And so what could you do with that? If you still wanted to keep this position, what you could do is you could just let this position ride, and then you can create another position. And the other position would be to hedge basically this position. Now, I know that in the beginning of your trading, because this happened to me, is I felt overwhelmed with, am I throwing good money against bad money? Because I know this theory or this thesis. And I guess the other way of looking at this is, am I just protecting this money? And I think that's how I look at it now. So in this aspect, if you bought a butterfly, what you could do then is you could buy a put, a straight put, you could buy a put debit, or you could buy a credit spread. And in doing so, it kind of neutralizes your losses. Because as this is going down, your other position is making money. And what's that doing? It's offsetting this position. So
Wow.
where now your experience and your confidence comes into play is if you can have the foresight as this is dumping to hopefully a support zone, you then cash out of this position that was making you some money. And then now you don't have to buy, like we just talked today. This was a great segue about how, you're selling at resistance and you're buying at support. So here, all of a sudden, we find that we're not at support and it's breaking through support and it's going against us. So you buy a position that's going to help you reap some reward as it's going down. You see a support zone. And what do? You don't let it ride, because I know that this is what happens. It's a non-decisional aspect of, should I just let this ride? Because this one's making money. This one is still at a loss. But what you have to do is make sure you separate the positions in your monitor tab so that it's very, very clear. They're not together in one tab. You need to see them separately. And then as this is making money and at support, you then sell this position. And in this case, you could have, I often suggest getting because you bought this, I say sell a credit spread as it's going down. And say it.
So let's just say if we do a butterfly that's say 3 weeks out, we can wait a week before we find out if it's going against us or not, right?
Well, if it's going, the way that our market's moving as volatile as it's been so strongly against us when it does go. If it ended up breaking support, as an example, like if 390 broke and all of a sudden the entire market just starts to flush, including Roku, right? Because Roku had relative strength comparably to the rest of the stocks in the market because of this news event. So if 390 breaks and the market starts to fall and this is falling, then what I would do is, regardless of how many weeks out you have, you could utilize this trade. And you can utilize anything, by the way. I'm referring to this trade because I guess this falls into a segue of trade management. That's what people call this, is trade management. But if you had a portfolio of stocks, what are the hedge guys doing? They're just buying SPX, right? They're buying SPX puts, they're buying SPY puts, right? To hedge the whole portfolio. So if you wanted to do that, you could do that as well. If your mind doesn't think like this, because I know that this is a lot of information and we all don't think the same way. But this is how they teach it. So I'm going to teach it to you the way that I learned it. But really, based on your confidence and experience, if you didn't want to put any more money into Roku, even if it's in the direction that it's going, you could say, okay, well, you know what? I'm going to buy a couple SPY puts. I'm going to buy a SPY call credit spread, sell a call credit spread, right?
Right.
Neutralizing your deltas and taking advantage if this does just go sideways and down super duper slowly, as some things often do after a big push. So that's just an opportunity of just getting your mind just to open up to the aspect of, because what happens if all of your butterflies are all, bullish? So,
Oh, you
so
mean
what are you doing? What are you
like not
doing?
nice?
What's that?
You mean like not nice? Who has a bullish bias? Yeah, I mean, this is great. Gentlemen, you just asked this group, am
Yeah.
I the only one that's being blown away by this? I mean, is everybody else familiar with this, or is it something that um, I mean, is this helpful at all?
Are
Put a
you blown
woman
away
or,
by this? Come
oh,
on.
absolutely.
Seriously?
I never thought about just hedging. I mean, an example is,
Yeah.
remember 6 weeks ago, I bought Kohl's because it was supposed to be a buyout. And I bought these like $60 calls,
Yes, yes.
I haven't sold them because it's still,
Still got
I mean,
time.
they're just sitting there, but
Mhm.
still, I haven't even thought about just going ahead and selling a spread against it or something like that.
Right.
So,
And really you're not selling a spread against it, so to speak, because you're going to make sure, I'm hoping that you make sure that they are separate. And if you don't,
mhm,
what will happen is when you create your trade, so let's say you pick a put or you pick a credit spread, it'll lump it, especially Thinkorswim. I don't know about any other platform, but when you go in your monitor tab and you look at Kohl's, you won't see another trade on Kohl's. It'll be all under that one little tab. And then you click the tab and then you're going to see like, then you're not going to clearly be able to make out your butterfly, especially if you're overlapping some sort of spreads. But
right.
right, you know how that goes. I mean,
Mhm.
hopefully everyone has witnessed that uh, nightmare. And so what you want to do is as soon as you get into the position is you just right click, on the position and then just make sure you move it to another group. And I just,
Okay.
call it something else.
Okay. Now,
And then,
Raphael has a question about
sure.
this on the butterfly. He
Okay.
says, if you sell it on the day expiration, is where you get the profit on the blue line, or do you have to let it expire to get the blue line profit?
Okay. So, okay, you cannot let a butterfly expire on a stock. You can only do that with SPX, but not on any other stock, just SPX or the NASDAQ, which is too expensive for you and I to get into, or something else. But what you want to do is on a stock, you want to make sure that when you're in profit right before expiration, you want to close it out. Because right here, what ends up happening is the blue line is giving you the diagram of your trade. It's giving you a visual graph for you to identify, oh, I understand now. Here's the wings of the butterfly. And then here is where my most profit is made, is in the middle of that tent. And then the time value is the pink line. And the pink line, when you start, if we go to our theoretical calendar here, we put it here on the day that we created this trade, you could see that the line is almost flat. So that's time value. So you got no time value yet. And this is the way your trade looks. And so your pink line is what's giving you money. And so what you want to then do is let time pass by. That's why these red candles don't bother us in a trade. As time passes by, the pink line then starts to rise, giving you enough time element, right, for this to move back to the upside, hopefully, unless we go crashing down, right? And so at some point, then, you need to have your trade plan and say, was this cheap enough for me to just let the whole thing go? Or do I want to stop at 50%? Or do I want to stop at, whatever it might be, 75%? It's going to be up to you. If something this cheap for me, because this is cheap for me, I don't, that's all on perspective. If I had 10 of these, is this now cheap? No, it's not. So now I'm going to be more concerned about it. But when I buy like two or three, like it's no big deal to me, but it may be a big deal to you. So you need to just know, if I lose 50%, which is $22 or $23.50 or thereabouts, do I want to close the trade or do I want to let that ride? And then of course that's per contract. And so you need to make those decisions. But I'm telling you that if you still think that your thesis is correct and that the market's going to move that much farther into the future by September 30th, then what you could do is limit your losses by not freezing, because deer in the headlights, right? So let's say, and this used to happen all the time, so I know it very well. If I had 6 or 7 positions and they were all bullish, that was my first mistake. The second mistake is then as the market's moving against me, I'm not doing anything. I'm just watching the candles go right up against me and I'm just losing money. And I'm like, well, I know what I was taught, but I just couldn't get myself to react. And trading is lots of thinking, but what makes you money is reaction. And that's why I often say, if you're a multitasker, you're probably making more money than me, because you don't need to analyze something 20 times over again. You just go, oh, this thing's moving against me so far. Let's say it moves against me to the 50% level. And I want to tell you that often people will use your break-even point. So we bought it here, and this is your break-even point. So if this is my break-even point, as it's starting to pass the break-even point, that would be an indication of, oh, wait a minute, should I put a hedge on? Now, remember, if it goes against your break-even point and you put a hedge and then it moves back, right? Now you have to manage 2 positions. Mm-hmm. So just keep that in mind. I just want to, so I would do this really if you had a lot of conviction in your thesis and you wanted to keep the position on, to just go ahead and hedge. You don't have to hedge it with the same position, but you could hedge it with spot. You want to make sure that if you're in profit on that last day, that you need to close this out before the close of escrow, my real estate coming back. You want to close that out, and you're familiar with that. You want to close this out before the end of the trading day, before the close of the bell, because you're going to get assigned, and that's just a headache and a lot of stress. So you want to make sure you get it. Now, what happens if you say, I'm not going to worry about this, and this keeps moving against you, If it closes over here away from your wings, okay, you can just let it expire worthless. You're not going to be penalized. You're not going to be, no scary things are going to happen. You just lose your $47. It's only when you're making money you have to close the position. Okay.
Raphael, does that answer your question?
Except for the only caveat, of course, it's always got to be something with trading, but the caveat is if you're selling credit spreads and they move out of the money because you're correct, if your credit spreads are not in the money, then you've received your entire credit. So you don't have to close them out. They expire worthless. But for something that you actually buy up front, as long as you're not making any money, then you can let it expire worthless as well. But if you're making money on that last day, you better close it out, because they're not going to help you out with that.
Okay. And then Raphael asked, but with SPX, you get the profit if you just let it expire.
Yeah, you get the whole profit. That's what's so lovely about SPX. And, I was updating Discord today and I was looking at our SPX lottos, and we haven't done any. And I was thinking about that. And it's just been too volatile these days to even try to predict where the close is going to be. If you can do it, great. Hit me up, send me a DM, we'll send it out. But this is why I'm not concentrating on it. I just concentrate really on the trades that I'm taking. And so anything that I send out to you guys, I'm taking the trade. So, I'm just thinking about the market environment and what's happening. It's not that I don't want to trade those trades. I love the broken wing butterfly income SPX trade, but it's just too volatile right now. I don't want to get into something that has enough potential of loss for me to have to I want to creating the trade up front with some thought, is the difference sometimes between winning and losing trades. If you're just haphazard about it, you're just throwing all your money at the market. I'm not really sure that's the way to be, but looking for some sideways action to get into kind of a lotto, a zero DTE. But you can definitely do one of these butterflies right now on SPX, you know, for a week out or 2 weeks out, just like what Jay's doing, and see how that plays out if you have a thesis on it. Or you can practice with some cheaper stocks, you know, throw out, because you know SPX is going to be way more expensive than $47.
Yep. All right. Now, were you going to talk about credit spreads now, or what? I kind of got you off.
All
I got
right,
you
so
off track here.
no other, no, you're fine. I mean, you know what? Credit spreads, debit spreads, you know, one you're buying and one you're selling. The only thing about credit spreads is because you're selling, they seem a little confusing to people, but if you're expecting Roku to go higher, typically you buy a call or a call debit spread. But when you're selling, you're actually selling a put spread.
Mhm.
And so selling it gives you a credit up front. So you're acting like the market maker. And then you're basically hoping that, you know, the market just keeps going up and Roku's making money, and you can get to keep the entire credit.
Okay, listen to this.
Okay.
Raphael says, I've been trading the broken wing, and so far this week, I can get out the day after I put in a trade for 50% or better.
Oh my God, that's awesome. So the
I love it.
volatility is actually working in your favor.
I
So,
love it. Yeah.
so this is wonderful. If you can, and you know, there's a, just like with anything, and I'm sure like a surfer experiences this, right? Sometimes you get out on your board and you just can't catch the right wave. All the good waves are coming, but you know, you're kind of fumbling around. Okay. So you're going to have those weeks and you just have to obey yourself and just know that. And if you have a portfolio of 10 stocks or 10 positions in your portfolio, and it takes time to manage those trades, sometimes you're not in the mindset of putting more on. So sometimes I believe less is best because it allows you actually to be able to feel the market. And if you can take advantage of that ebb and flow, like what he's doing right now, you could really profit from that. And all this other stuff ends up becoming what? Busy work, right? We're busy managing. We're like being, you know, pencil pushers, trying to manage our trades. And well, you know how that goes, but you're pretty good about getting your stock positions as well as your options longer dated. So you're not really, I remember that one time I saw your portfolio and I was like, geez, Jay, how do you keep track of all of this?
I don't.
It's like, oh my God, I have 7 positions and I want to tear my hair out when you know, expiration comes. I'm like, okay, well, how am I going to do this? How much do I want? Let me see where the market is. Let me recheck and check and check and check the chart again. So that's awesome. If you got that ebb and flow going and you can feel the ebb and flow coming in the market, you're timing that out. That's awesome. So have you been going, what's your positioning been? Has it mattered? Or are you always doing a put, broken wing butterfly, or the call?
Raphael, we're talking to you now. Yeah, it's
Awesome.
good. Yeah.
That's awesome. I'm so happy. It's making somebody some money.
He's been buying calls since the price is under the 20-day moving average.
Oh my God. And he listened to the videotape and he's got it all down pat. That's
so
awesome.
cool.
Congrats,
Yes.
Raphael.
Yeah.
I'm so happy for you. So yeah, you could do the same thing on this. Just, you know, this would be like a couple weeks in advance. So you're just trying to identify where price is. And though you're not getting a credit up front here, you're actually shooting for the butterfly, where the broken wing butterfly on SPX income trade, right? You're just hoping to get that credit. And you really don't want to hit the butterfly because that's when you know the position's really going against you, right? It's kind of like a Hail Mary, a lotto. Oh my God, you know, the you know what just really hit the fan. So really you just want to stay here and just get your credit and it's easy money. But good for
Mhm.
you that you're managing it and you're taking, I'm so happy that you are taking profit off the table and not having to wait, right? Not waiting for the entire 100%.
Yep.
Because if you could take 50% and put another one on and get another 50% tomorrow, hell, that's your 100% where you could have just stayed in the trade and you might have to wait a whole week to get the whole 100%. So as far as strategy, trade strategy is concerned, you're doing it right.
Mhm.
All right. So you wanted to talk about credit spreads. Tell me what you want to know about
Well,
credit.
whatever you had on the agenda today, and not necessarily credit, I think you said your ads that you were going to talk about um, spreads of some type or strangles. I don't remember now.
Well, you know what? That's a good thing. So today, does everybody understand the trade that we put on today for tomorrow? The straddle. Put a 1 if you understood, don't want to go over it, or put a 2 if you do want to go over it. If you're not familiar with how this strategy works, where you buy a call and a put at the same time, what are we really doing?
I see it too. What's the difference between a straddle and a strangle?
So a strangle is, let's go over to the trade tab. You know what I was going to do real quick while I'm here real quick, and because you wanted to know about the credit spreads, so uh, I was going to put the diagram up here of a call credit spread for Roku so that you could
Okay.
actually see it visually,
Uh,
how, you're looking at your money and you're looking at the strike price and you're looking to see, this go down. But once you put the diagram here, let me just put it up here real quick and then we'll go to that.
okay.
Just so you can visualize it. So when you do it, right? You
Mhm.
said, I'm gonna try that little hedge action on Roku. So you're wanting it to go to 85. It's going against you. You're going to take a call credit spread. And let's say you do, we're at 73. Let's go 85. We do this $5 wide. Let's do this at 70. And this at 65. So this is going to cost you $345. So you don't need 3 of them. You could just take 1. If you
Mhm.
buy a 1, your max loss is 345, and it's saying that your max profit is 155. And why is that? Well, the reason is because we're like in the money on this. We're already. Let me pick another one. Let me see. 85 here. Let's take a look at the chart. Excuse me. So if price is here, and yeah, so we did that right. Let me just put that up. The reason is because uh, you're actually going into the favor of the market. And so
Mhm.
because of that, you're not going to be making as much money. Oh, make sure that the time element.
Would it would it be the opposite of that if we were doing a put spread?
Well, that means that you want the market to go higher, but you already
Oh, got it.
you already
Yeah.
have that side covered, right?
Yeah, that's true. We do. Yeah.
Right. So you're looking to hedge it. So you want it to go on the other side.
Mhm.
But you could put, okay, let's just do it here to be more 1-to-1 here. So let's put 73. Let's do maybe $3. Okay, that's reasonable. And really what this is the width of it is just it being reasonable to you, right? So you could put 1
Mhm.
or 2 of these on if you wanted to. So $138 and your max profit is 162. So it's kind of like a 1-to-1. So let me
Mhm.
put it on the board so you could just visually see what I'm talking about. So now we have both positions on, and this is actually, this is where price is 72. It's still too close here. We actually want it to go the opposite direction. So that's not right. And this is exactly what you would do when you were, yeah, that's not going to work.
Okay.
Hold on for just a second. Let me see if I can do this. Oh, you know what I did is I bought it. I need to sell it. I'm wondering, what in the world did I just do? Let's put this in 70. Get a $220 credit. Your max loss is 180. Here's a, so you're selling this, that's why it's red. You're getting a 220 credit. So you're getting 220 and your max loss is 180. So that's pretty good. So now we're going to go to the Analyze tab. Okay. So that is your spread. Let me put your butterfly on. Okay, and price is here. All right. So now what ends up happening is you have this little valley in here. So see how you can visualize, oh, I make money now if I go over here, right? And you see how the line, this line is your time value. You see how it rose? It rose because you're actually selling, and you know that if you sell options, that time actually works in your favor, doesn't work against you. So it actually brought up your profit value here. So let me just move this over. And now you can see that here is your vertical spread, your credit spread right here is this little graph, the blue line. Your time value is the purple line. You can see now you got a 220 credit, and automatically now that losing position, as an example, would put you, closer to a break even. You're like down $20. So what ends up happening is as you move, into the put position here, you're making money, and you want to make sure you look at the chart to see where support and resistance is. Because once it gets to a nice, good, strong support, or the market environment starts to change, you're going to want to take this profit. You're not going to want to let this go all the way back to the other side, because you already have a trade for the other side. So you're just working that trade separately. But visually, you can see if you put them both on, that how that time value rises and starts to protect you as it's moving into a profitable trade. Okay. Now, this is still losing money. Don't get me wrong. But this offset, right, is helping you, as well as if time just starts, messing around, not doing anything, you're still making money off of this trade. Until you sell this, or excuse me, close it out. You're going to buy it back to close it out as the market starts to now finally, turn around and start going towards your thesis. At some point, if you say, you know what, I don't think this one's going to work out, you could just close that out if there was any value to it. If there's not that much value, I always hang on to it. So what ends up happening is if you buy 10 of these, and you have an investment in it, you may want to get rid of, as an example, 50% of your position as it loses 50%, so that you're still keeping some capital, because you may want to add to this position, right? As it's working, you may want to add to it and buy another one and another one and another one. It's kind of what I do with any position that I get into, like Roku this morning. You get into one, it starts working, get into another one, it starts working, and you kind of just make your way into it. So
like Raphael's doing, right?
What's that?
Like Raphael's doing, just, you make 50% in 2 days and you just cash your money and start all over again.
Sure. And in this, you don't cash out though. If it's working in your favor, you just buy another one.
Okay.
And another one. Or you could close this one out as it's making money, buy another one even further down. So you could see how it kind of just opens your mind to like the ebb and flow of the market, and how would you strategically put yourself in a position where you could benefit from all of that instead of, and I only because I've been there, I'm just trying to get you there quicker. I've been in the past where I just sit and look at my computer waiting for everything to turn around, but I'm not taking advantage of this strong movement going against me.
Mhm.
And now I look back on it, because now of course I'm different, and have more experience, and now I do this and I limit my risk. So by limiting your risk and cutting your losses and or making your money back as it's going against you, ends up giving you a better ROI when your trades start working out. If you get into a bad trade and you don't do anything and you just have, deer in the headlights, you don't hedge your position, you're not getting into a SPY put, you're not getting into any puts. Sometimes I'm just looking at the screen going, just buy puts in anything, guys, like anything. Like I give you the watch list, you can pick one of those if one of those are working, but like, don't be so like, we're so broad. We're like, oh my God, like, what do I get into? Anything, just pick one and just do it, because the market's really going. So, but this is just another way to just try to get your mind right in the mindset of strategy of like, well, wait a minute, I got into a cheap position, should I just like work that out? For the trades that we give out here, I'm not managing them yet because I don't want everybody to start calling me and getting stressed out over it. But I do want to start like introducing this concept to you, so that as I then all of a sudden put another trade on the same instrument, but going in an opposite direction, you'll know what I'm doing now, right? It's like, oh, I think I know what she's doing. She's kind of hedging her spot. So just something to take into consideration as we move into the more managing of that. So now that you have a visual of that, again, 100%, like 200%, please, just like I did when I'm putting on the debit spread, I made a mistake. I put a debit spread on instead of a credit spread. Like you need to put it on the graph so that you can get your mind straight with what you got going on, especially if you have a big portfolio and you have a whole bunch of stuff going on. You don't want to make these little mistakes. Just put it on. There's no rush. Put it on and make sure that this is exactly working out as you planned. And of course, you could just unclick the credit spread so that you could see like where your butterfly is at, as an example, with your theoretical calendar or whatever today's date is. Okay, so
Awesome.
we got that out of the way. And then you were wanting to know about just regular credit spreads, right?
Well,
So,
that or the strangles and
oh yeah,
the strangles and the straddles and
yeah. So today, as an example, we're just getting into a position where we're wanting to identify. There's an event tomorrow, this quad witching. What are we doing? Well, sometimes I think I'm putting on too many trades for you guys. I want you to give me your feedback tonight. If you would, please make some comments. If there's just too many texts and too many trades for you guys. So I don't want to overwhelm you with too many trades. I'm not sure what other
so what are we saying? One is I want more, two is I have too many.
Yeah, sure.
Okay, all right, let's please give us some feedback, guys.
Yeah, because we're really trying to this is an educational Discord. It's been everything that we do here has been suggested. So the watch list is a suggestion. We do it to help you guys. Doing trades. We never did trades before. It was a suggestion to kind of like help you get acquainted with them. So we're doing them.
We're getting ones. They want more.
Oh, really? Oh, I might have to hire somebody to help me do all these trades and manage my own portfolio. So what we got going on here is, okay. So tomorrow there's an event, and really any day this week you could have did this and maybe made money. But we did one of these earlier in the week and it was profitable. And at any time you could put one of these on by yourself. And so what we're doing is we're just looking at the chart and saying, okay, it's quad witching. And with quad witching means that we're probably going to have, I mean, we had a pretty decent move today, 2 or 3 times. You could have just played support and resistance off of the SPY and made money today. If you had patience, right? If you had some patience. And so what ends up happening is what we try to do then is just say, okay, there might be a gap up or gap down tomorrow. Is this 386.87 going to hold for the SPY? 390 was the get-go. And look where we closed, right at 390.12. It's just shocking to me how this works out. So is this little zone going to hold? If it doesn't and it breaks down, I can tell you that, there's a lot of algos, a lot of computers that are already programmed. If it breaks 387 as an example, that's it. All the computers are going to start flipping. And as they flip to the opposite side to sell, what's going to happen? It's going to drive price down. And then what you're going to see is this watershed event where it's like, wow, like a waterfall. And you want to be in it. Don't have deer in the headlight. So what sometimes is nice is if you just get yourself prepared the next day and go, I already just want to be in. So what you do is you just take a look at your trade tab. We're going to go to SPY. We went just, next expiration. And we're going to go on the single here. And so what was the expected move? The expected move was actually $5 at the close, 5.50. It's now 4.8. So let's just say approximately $5. And at the time, I think it was around 389. And so you just go $5 up on the price for the calls and $5 down on the price on the puts. But we're at 386 right now, guys. So this one's making money. The put's making money right now. And so what do we do tomorrow morning when we wake up and this one's making money? We want to make sure we don't lose that money because I did this last time. So what we want to do is if we're making money and then all of a sudden it hits a support area. So where are we at right now? 380. Let me just look at the S. So we're at 3. That probably counts. All right. Put B. Okay, so we're at 385. So what's our next level here? So 385 and this is. So after 386, we really don't put this out with it. So we have a heavy support here at 388. We broke it. So we broke 388. Wow. We might have a nice dinner and cocktails tomorrow morning for our work that we put in. This might be nice, guys. So if we break down out of that and it doesn't bounce back up to sweet in the morning, if this goes down to 378, that would be your next see if it bounces. If it doesn't bounce at 378, and by the way, could you take your money right here at 378 and then just get back into a position after it, really flushes, or if it goes up? Because remember, nothing goes down like, automatically, but please watch your wave as well as your other indicators. So, if it goes down to 378, wow, that would be good. Oh, we'd be around the $500 level. This is not, of course, including volatility. So this might end up being profitable. So what ends up happening is you're making this trade basically, and you're saying, hey, look, I need price to go down that far to start making money. So right now we've just made not very much money. Like what's tomorrow? Let me make sure the date on here is right. Yeah, so it's only like 25 bucks. So what we need is when the flush happens in the morning, we'll see if this gets a little bit farther. And then with the volatility, you're probably going to be opening at about $100 profit. So just want to keep an eye on it to see if it hits major support and bounces. If it does, you definitely want to get out of that position. Get out of that position. When you first open up in the morning, if you don't think this position is going to be profitable the entire day on the call side, you can just close that out because that's going to be at a complete loss. So you could see what ends up happening. One side is a loser, but if the other one ends up going past one standard deviation, you end up making, 2 times more, and it pays for this and then some. So last time we did this, I think it was on Monday, when it was all said and done, we profited 80% off of it. So
Now, even though you've got the 5-minute opening range breakout, do you still go ahead and dump it or sell it if you're profitable, or do you take a chance?
I really like you. Yeah, no, I really like you to take a look at the chart and see, follow the chart, like
Mhm.
follow it down. If it's going down, it hits the 385 level as an example, and then all of a sudden this is going to move down. So you're going to have another target, and it keeps hitting the target and passes. I mean, you just hang
Right.
on to that baby, and if you could get out of your call position, go for it. But
That's what I mean. Yeah, whichever
oh,
one is going against you, you go ahead and get out of that.
but if we gap down tomorrow, if we open up at 386 tomorrow as an example, I don't think your call is going to be worth anything. So sometimes
Right. Oh, that's true. Yeah.
sometimes I just use it as a lotto.
Right.
I wait for the bounce, because
Got it.
that might be your better position to get out of it, because like right here, it's at like, let's just say 80-90% loss. Like, why even close it? For what?
Exactly.
But if we have a snapback crazy boom, then you're almost at,
Like today.
yeah, you're almost at break even, or you're only 50% down. So if you can
Mhm.
salvage any of your capital on your call position, go for it.
So did anyone in the group get in this today? I know Sandy talked about it. I had already started one on the queues when she did that. So
Listen to you.
yeah.
I love it. And guys, I hope you guys are taking, you know, um, you know, Jay's cue here. Like, I really want you to start thinking, as an independent trader. That's what that's what our hopes are for. So you take these ideas, and then they become like, oh, I understand what she's talking about. Let me try to do one of these. And so Jay's already just trying to do it on the cues. So that's excellent. And I'm hoping that you're thinking about those things too. So even though you ask me, like in the group, as an example, hey, you got a trade plan for today on, this, I may have Zooms, I may be at an appointment, I may have other things going on. And so,
Golf.
oh, please, not yet anyway. You're so funny. I haven't played golf in so long. You're so funny. But I know, because running the Discord's all so passive.
Oh yeah, it is.
Yeah. So by the way, speaking of Discord, I've been really cleaning, I've been jujuing the Discord up. Big Boom, I hope I said that correctly. So if you guys are going through the channels and you miss something, you're like, oh, she took something off and I don't like it, or, I don't like the way this looks, or how it feels, let me know so I could, improve it. This is how we got here, is you guys talking to us. So please do that. And then, so be on your mark in the morning, get ready to rock and roll, because this is about profit in the morning. So you have a trade on, and you need to manage that trade. You need to watch the chart and take profit. Please don't let it get out of control. Like you saying, oh, I'm sure it's going to, after it goes up, it's going to come right back down. This is a crazy market, and it's quad witching. Who knows what's going to happen tomorrow?
That's true.
I say take profit, wait till it gets to resistance, and then get back into another, put position. Start thinking about, like, what do those football guys do when they're running? They're like, they're running with the ball and they're moving people over to the side, and you're kind of doing a little back and forth, back and forth. You don't have to just stay like a statue in one place and watch the candles move against you and against you and against you, and you not do nothing about it. So you need to ebb and flow as well.
We
So,
got Raphael doing that.
yes, he's doing good. He's got it down pat. I like
Yeah.
it.
Okay, thank you all for showing up tonight. Oh, I got a couple new messages here. Let me.
Okay.
How would you handle this position if there is what appears to be a gap fill at 9:30?
Oh, well, then you're playing the opposite position, right?
Yeah.
So now you're back in the middle, and we don't want to be back in the middle because we lose in the middle. So if we get back into like a gap fill and we're back at right where we close, you may want to just close out your both sides if you just want to keep your capital and reinvest it in a new position once you look at the chart and go, okay, I think this might be bullish. Because what ends up happening is the more that it chops sideways, you lose money on both sides. It's gonna be zero on both ends of it. So you could just salvage capital, or if it was cheap to you and it didn't cause you any stress, look at the chart, see where you think this thing is going, keep one side, close the other one out. You have a lot of possibilities. But like,
you
to
sell?
give you that definite answer, like right now, we don't even know what's happening tomorrow.
Right.
It's kind of like, yeah, it's hard.
But would you sell it the first side of a green candle?
First? No, I'm not a quick I'm not a quick reactor like that. I'm like more like, I gotta study that damn thing. So, but that's me though. That's
follow
me.
the trend. Yeah.
Yeah, I'm trying to determine the trend. We're in a downtrend, but I have to tell you, the Bulls have been they have been defending. If we were thinking about football, they have been defending this 390 spot. I would not be surprised. If we woke up and this $4 is, we're back at ground zero again. We're right back at 390. It wouldn't surprise me at all. Right. And you just have to be prepared for that. But if you are already stressed out, over the $70 we spent on this trade, like, you shouldn't be trading. This is not the profession for you. If you're worried about the $70 that we invested in this, this is, you have to be able to trade confidently without being, you know what I mean?
Yeah.
This is, when you trade, you're trading with extra capital, discretionary capital. This is stuff we don't need this is money we don't need for anything in our lives. And we're in that percentage of people that are able to do this. Yeah. And the only way that you're able to continue doing this and learning, it takes years and years, people, is to be able to conserve your capital. So I don't want you to be willy-nilly and gamble, but I want you to be strategic. But if you're also stressed out about $70, this is going to cause you a lot of grief for nothing.
The Sly said he was just asking it in principle because he knows he can always scale up and scale out. Yeah. Oh
yeah, absolutely. That's why for most positions, I get in with 1 or 2 contracts. Now, granted, I am a conservative trader, but I only start with 1 or 2. And then if I wake up tomorrow and we're like in a watershed event, now I'm starting to buy contracts. What was that day? Was that Monday that I was screaming about Apple? You probably, I was blowing up your phone. I bought so many contracts that day, but I made literally like a month's worth of salary on that one day. And that's what we do. You have to recognize the days that we're not doing nothing, we have our surfboard out. We're just like waiting for the wave,
Putting wax on it.
We're putting butterflies on for fun. We're, we're learning about the process. We're putting butterflies on this side just in case, the market does go up, and we're putting a couple butterflies on the other side just in case the market goes down. And, we have our foot, we're out there waiting. We're participating. We woke up early. We drove all the way out to the beach. We got our wetsuit on. We got the board. It's a lot of work to do all of that, but you're there. You're waiting for the big moment. But you have to be able to recognize the big moment, and don't be stressed out and try to trade and spend all your money and your capital on these days that we go sideways and go nowhere. Like this, you don't want to do that. You know, paper trade or go on demand and practice your trading, go read a book and learn about trading, but don't lose your capital. Just because the market's open every single day doesn't mean that we make money every single day. And I don't want you to lose money every single day. We only make money on those really great days, and we have them coming up. So we have them coming up. So if I just say, you know, get in puts, it's like, just pick one. You know, you don't have to overanalyze it. Just pick something. Or
all right, last question. Tiara wants to know how you got the green bubbles on your chart.
Oh, okay. So this is an indicator that is the TTM squeeze, or excuse me, TTM LRC. So if I go here and go TTM LRC, that's weird. Here we go, TTM LRC, and I put this on my chart. This is the regression channel that you get free with Thinkorswim. Oh, my computer's lagging here. It must be a, let's see, and you could see it. I have a lot of stuff on my chart right now. Let me get rid of this. So the TTM LRC is this regression channel right here that you can see, and it gives you the price movement for the time period that you're on. So what we did is we created these bubbles right here just to show us those lines right here without having all of these lines, because, you know, eventually, depending on how many lines you have on your chart, it becomes spaghetti, and you can't, you're not focused on price anymore. You're focused on spaghetti, and you can't figure it out. So what I did is I like these lines because it lets me know, you know, basically, this is price movement. No matter what you say, this is price movement. It's based on ATR, believe it or not.
Do you have to turn it on? Because Tiara says she's got the TTM LRC, but does not have the bubbles.
Oh, the bubbles are in our Discord. Go to our Discord, TOS tools, TOS indicators, excuse me, TOS indicators. And it's not in the newer area where the videos are. Let me just show you real quick.
Tiara, this means you can do this tonight while you're at work.
That's right. She's got shift work going on.
Yeah, I know.
I know. I feel sorry for her. So,
she doesn't work tonight. Okay.
So here's, can you guys see my screen?
Yep.
Okay. So here's TOS indicators. So where this is at is not in the newer part. I've been trying to do videos with all the indicators. It's in the older part where I was just popping pictures in when I was a beginner Discord person. Here it is right here. So it's 529. And then here's the script for it right here. And this is the TTM LRC regression channel for every time frame. And it's just the bubbles.
Got it.
Okay.
All right. Well, Tiara, I hope you get some rest tonight then, since you don't have to work. So that's awesome.
Guys, I hope that this information was helpful. If, you know, please leave us your suggestions and stuff. And don't forget that we have that raffle going on. Your testimonials are awesome. Who was it? Al gave a testimonial about butterflies. He was a poet, really.
I didn't see that one.
Oh my God, you have to read it. It's awesome. I love it. Please check out the raffle that's right here. If you post a testimonial, of course, be honest. If you post a testimonial, your name will be put into a raffle, and then Jay is going to identify that name in October.
That was Gavin.
What was that?
Did that. Gavin is the guy. Al gave.
Al gave is Gavin. Gavin, that was really, really cute. I loved it. We love you too. Thank you so much. That was a great one. Go check out the raffle, and then please put a testimonial in there and tell us how we're doing. And if you have any complaints, please DM me. Let me know. We'll change it up. We're trying. Thanks so much, guys. Have a great night. And thank you.
We'll see you all tomorrow. All
All
right,
right.
bye-bye.
Bye-bye.